You're in tune to the Paperflip Real Estate Podcast.
Feeling like you're stuck in a rental loop forever? Well, it's easy to feel that way. You see the headlines about the housing market, you glance at the home prices in your neighborhood, and the idea of a down payment just seems completely and possibly out of reach. It's a number so big it feels like a wall, blocking you from the dream of owning your own place. A place where you can finally paint the walls whatever color you want and build real equity for your future. You work hard, you try to save, but at the end of the month, does it feel like you just treading water? What if I told you there's a proven step-by-step way to turn that scary number into a real achievable goal? And what if you could stop feeling overwhelmed and start feeling empowered? Well, in this video, I'm going to walk you through the exact framework for planning and saving for your down payment, even in today's wild market. Now, this isn't magic. It's about having a plan. And by the end of this video, you will have that plan. But before we jump into the 7 steps that will become your roadmap to home ownership, we need to clear the air. We have to dismantle the single biggest myth that stops most people before they even get started. Let's talk about this 20% down payment myth. Let's debunk that. Let's talk about this big monster in the room, the 20% down payment. You heard it a million times, probably from your parents, told you this, and you've read it in articles. It's become this sacred rule of real estate. The idea that you want to buy a $400,000 house, you need to stroll into the bank with a check for $80,000 cash. Now, for most people, especially first-time home buyers, that number is so discouraging, it makes the whole dream feel like some kind of joke. This number one reason people just give up. They don't even try. Let me be crystal clear here. You do not need a 20% down payment to buy a home. That's a myth. You do not. Now let's look at what actually is happening, what's going on here. Now, according to the National Association of Realtors, the median down payment for first-time home buyers in 2024 was at around 9%. Now, for that same $400,000 home, that's $36,000, not $80,000. Now, that's still a big chunk of change, no doubt about it, but it's profoundly more achievable. It's more of an achievable number than the one you've been told and the one that's been holding you back. Now, in fact, many loan programs allow for even less than that. Conventional loans go as low as 3% down, and a FHA loan, which are super popular for first-time home buyers, require a minimum of just 3.5%. So where did this 20% rule even come from? Well, it's not totally random. Now, putting down 20% is the magic number that lets you avoid paying something that's called private mortgage insurance, or PMI, private mortgage insurance. PMI is basically an insurance policy that protects your lender because they're taking on more risk with your smaller down payment. Now, it gets rolled into your monthly mortgage payment, making it just a tad bit higher. Now, avoiding PMI is a fantastic financial goal, and it will save you money in the long run. But thinking you must have 20% is a classic case of letting perfect be the enemy of good. Many financial experts agree that it's often smarter to buy a home sooner with less down rather than waiting years to scrape together 20%. You ask why? Because while you're saving, home prices are probably going up and you're still paying your rent, which builds exactly zero equity for you. Zero, nothing, nada, zilch. Feels like, you're trying to catch a moving train. Now, paying PMI, or private mortgage insurance, for a few years until you build up 20% equity in your home, at which point you can ask to have it removed. You can't have that removed. It's often much savvier, more savvier move than just sitting on the sidelines waiting forever to come up with the down payment. So our first big mental shift is this. The 20% down payment is a goal, not a gatekeeper. Your actual target is probably much, much lower. With that myth busted, now let's get around to building your plan, starting with the most important step of them all. So let's get with step number one, which is set a crystal clear down payment goal. Now, if I told you to get in your car and just drive north, how would that make you feel? Well, like a little lost, right? Are you going over to the next town, or are you going across the country? I mean, what are we doing here? How much gas do you need? It's a recipe for failure, to be exact. Saving for a down payment without a specific goal is the exact same thing. I want to save for a house. Well, that's like a wish. I need to save $25,000 in 30 months now. That's a plan. This is where we transform that vague cloud of anxiety into a single concrete number, some solid, some you can deal with, some real numbers. This number is your North Star. It's what you're going to follow. So first, get a realistic post on home prices in the area where you want to live at. Just spend a little time on sites like Zillow or Realtor, or my favorite, which is redfin.com. Go to these sites, check out, look at what they do have available on the market. You don't have to find your dream house today. Just start looking. But you do need a ballpark figure. Now, for example, let's say homes in your target area are around $400,000. And of course, your number might be higher or lower depending on where you want to live at, but the math works out the same way. So next, after you do that, pick a target down payment percentage. Now, we already know you don't need 20%. You don't need that. Maybe you can aim for 5% or 7% or 10%. Let's roll with the national median for first-time buyers and choose 9%. Now, on a $400,000 home, your down payment goal is $36,000. But hold on, wait a minute, we're not done here. You also have to factor in closing costs. These are the fees for finalizing that mortgage, and they typically run between 2 and 5% on the home's price. So on our $400,000 home example, you should budget another $8,000 to $20,000. So let's be conservative and say around 3%, which is $12,000. So your total savings goal is your down payment, $36,000 plus your closing costs, which is $12,000, which brings us up to a total of $48,000. Now, all of a sudden, we got a real number. It's not some scary, undefined monster. You know what the number is. It's $48,000 to be exact. It's measurable. The final piece is now setting a timeline. Like, when do you want to buy the house? Is it 2 years, 3 years, 4 years from now? Let's say you decide on a 3-year timeline, or let's put it at 36 months. Now we do the simple math on it. $48,000 divided by 36 months is about $1,333 a month. Now that might still sound like a lot, but look at what we just did. Now we took the terrifying idea of a down payment and turned it into a clear, actionable monthly target. Now we know exactly what we're aiming for, what we're shooting for. This clarity is everything, give you everything that you need. Now you define the finish line for yourself. Well, let's figure out how to get you there, the roadmap. So let's go into step 2, and that's what we're going to create a budget that is going to actually work out for you. Now, I know what you're thinking. You're thinking about that B word, which is called it's called budget, not that one, but budget, not that other B word, budget. Now, for most people, budget is just a nice word for a restriction, some kind of sacrifice, or goodbye to fun. I don't like want to deal with no budget. I want you to refrain from that. Now, a budget is not a cage. It's a tool for empowerment. Actually, is you telling your money where to go instead of wondering where it went. You telling your money where to get off at. Your budget is it's the roadmap to hitting that $1,333 a month that we just calculated. So first step here, you have to know where your money is going right now. You need to know where your money is going. You need to track your cash flow. Pull up your last 2 or 3 months bank and credit card statements. Let's go and deal with the money. Let's take on this, just you and I talking. It's something you can do in private. Once you get out a sheet of paper and make 2 columns. Now in your first column, put all your monthly income after taxes. You know, your paycheck, side gig, a hustle, put everything. This is what you actually have to work with. Now in that second column, I want you to list and categorize every single expense that you're paying out. I mean every single last one of them. And be brutally honest with yourself here. Nobody's grading you, anything like that. You're not going to turn it in. This is for your personal use. I'll start with the fixed stuff, you know, the bills that are roughly the same each month. You know, your rent, car payment, insurance, student loans, cell phone, that kind of stuff. Now, after you do that, then next you want your variable expenses, you know, the stuff they kind of vary from month to month. This is where the real magic kicks in at. Now, groceries, gas, you know, restaurants, coffee, entertainment, shopping, those subscriptions you completely forgot about that you had. Now, this is where you find your spending leaks. That $15 delivery fee for that food you ordered, or that $12 streaming service you haven't watched in 6 months. You know, that daily latte or that large coffee, you know, the late night Amazon browse on their order and stuff. Individually, these things, they feel like nothing, like little small numbers. Ain't, you know, that's nothing. But you put all this stuff together, they can add up to hundreds of dollars a month. Now imagine that. Now, once you got all this stuff listed, subtract your total expenses from your total income. That number you left with is what this is what you're currently saving, or what you probably overspending. This is the number you're going to work with. Now, this is often a huge aha moment. We're like, wow. Someone just say, damn. Yeah, that number. You might be floored to see that you spent maybe around $500 on restaurants and $200 on random subscriptions that you don't use. But that's cool. It's okay. Don't get discouraged here. This is just knowledge. And they say knowledge is power. Now you just found those leaks in your financial boat. Now you get to plug those leaks in. We getting ready to do that. So go through your variable expenses line by line, each and every one of them. Where can you cut back at? Now, this isn't about never having fun again. We're not trying to do that. That's not the goal here. But it's about being intentional. And maybe you cut dining out from 4 times a week and cut it down to once. Or maybe you become your own favorite coffee maker or barista and brew your coffee at home. You know, you can cancel that gym membership you don't use and the streaming services that you don't watch. You can imagine that. Imagine all the channels you got and the ones you paying for and that you don't look at. So the goal is to find that $1,333 or whatever your number is. And by redirecting your own money from things you value less toward the one thing you value the most right now, and that's getting yourself into your future home. So this is what I want you to do now. You find this information right here and starting to feel like it's actually possible. If you feel this information is like helping you out, it's giving you something to think about, help a brother out. Do me a quick favor, hit that like button and do subscribe. That would be greatly appreciated. It helps me grow the channel and continue to put out information and give you the tools and resources that you need. And if you want to make more practical financial advice, just help you smash your goals and make sure you do subscribe so you don't miss out on what I got coming next. And the thing about it's totally free, and it really helps the channel out once again. So please do so. Okay, so you set your goal, you made your budget. Now let's make this whole thing way easier. We're getting ready to go into step number 3. So now step number 3 here is to automate your savings and make it non-negotiable. Automate your savings and make it non-negotiable. Now, this might be the single most powerful tactic in this entire playbook. Automate your savings and make it non-negotiable. Now, we're going to take willpower. We're going to take willpower and almost completely take that out of the equation, period. We're going to get rid of willpower because, let's be honest, willpower is kind of fickle. Now, we have great intentions, but we get tired. We get tempted. We make excuses. That's what willpower. We be strong, like, yeah, I'm gonna do this, but things happen. You know what they say, life gets in the way, and it does. The absolute best way to guarantee you hit your savings goal every month is to simply automate it. Makes things a lot simpler. So here's what you can do. You treat your down payment savings like your most important bill. Now, you probably already have automatic payments for your rent, your car loan, your Netflix, the gym, all that good stuff. So now you're going to set up one of these accounts for your future. And this is for that down payment for that home. So this generally what we're doing here is paying yourself first, and this is going to be a total game changer. We're going to pay yourself first. You get paid before anybody else get it. So what I want you to do is go into your online banking portal right now, or as soon as this video is over with, set up an automatic reoccurring transfer from your checking account to your savings account. That's real simple, right? A reoccurring transfer from your checking account to your savings account. You're going to do this every time you get paid. Now, the transfer should be for the amount you found in your budget. Now, like in our example, it was $1,333. And you schedule the transfer for the day after your paycheck lands. So every time you get paid, you can set it bi-weekly or you can set it monthly, but we're trying to achieve this goal. And so we want $1,333 a month. Then you got to make sure it totals that up for the month. You know, so why is this so powerful? Well, because the money is actually gone before you even see it. You know, we know that. When we get paid come, it's on. It never becomes a part of your fund money balance, in other words, when you put this money to the side. So you simply learn to live on what's left over after that. It's a good strategy. You know, there's no monthly debate about, well, maybe I'll just save a little less this month because, you know, this kind of stuff. You know, the decision is already made. Transfer happens automatically, relentlessly building your down payment fund in the background while you go about your everyday life. Now, that's powerful. This one move actually turns saving from a daily struggle of discipline to a simple, non-negotiable habit. It's the closest thing to a set it and forget it strategy for building wealth, and it's absolutely vital. But where exactly, should you be sending this money? And that's going to bring me around to step number 4. We're getting ready to get into that, which is I want you to open a dedicated home fund account. And we're going to grow a little bit. We're going from checking to savings, but now we're going to have a dedicated home fund account. Things starting to get interesting now, right? So your savings, they need their own place to live for this home fund account, far away from your everyday spending. Keeping your down payment fund mixed in with your regular checking account is a recipe for disaster. You're actually setting yourself up. Man, it's way too easy to borrow from it for a weekend trip or a new cell phone with this goal or this empty promise. I'll pay it back later. No big deal. We actually a lot of times don't get around to doing that. And when you create a separate dedicated account, your home fund account, you are creating a powerful psychological wall that makes you far less likely to raid the fund. This fund gonna be out of the way from the daily account that you interact with, which you use on a daily basis. So now, but check this out. Now, not all savings accounts are created equal. You don't want this cash sitting in a average traditional savings account at a big bank earning this little weak, pathetic 0.01 interest, if you can get that, just pennies. So you don't want this home funding account and that kind of account. We're not going for that. So that's like basically letting your hard-earned money lose value to inflation. And we're not trying to do that. But instead, you're going to open a high-yield savings account. High-yield savings account. Now, high-yield savings accounts usually offered by your online banks. They do exactly what the name says. High-yielding savings accounts. Now, they pay you a much, much higher interest rate than a traditional bank. Now, while rates do change, it's common to find a high-yield savings account offering interest that's 10, 20, or even 50 times higher than that standard bank account. This is something you can look at as free money in a sense. It's the bank paying you to let them hold on to your money, and it will help you with your down payment and help it grow even faster with zero extra work from you. Now imagine that. So in addition to putting your money in a high yield savings account, you helping to grow your account faster, building up even faster, even after you made these sacrifices to build this fund up. So opening one up is real easy. You can just Google best high yield savings accounts and look for one with a competitive APY or annual percentage yield. You want one with no monthly fees and no minimum balance. And that's critical. Now, this account will have one job and one job only, and that is to hold your down payment savings. This account is exclusively for that. It's going to perform that specific service, down payment savings. Now, your automated transfer will go directly into this account. So you can set that up and have it automatically coming out and put into this account. Then you just get to watch it grow. Now, for those with a much longer timeline, say five years or more, you could look into things like CDs or certificates of deposits, but your money will be locked up for some time. For most people on a 1 to 5 year timeline, a high yield and savings account is really the perfect tool for the job. So let's get off into step number 5, and that's supercharging your savings by slashing expenses and slashing debt. Now, you're building a foundation here. Now it's the time to hit the accelerator, step on the gas. We're looking for some big wins here. So first, your recurring bills. Most of us set them on auto pay and forget about them, but you could be leaving hundreds of dollars on the table. You didn't even think that, right? Now, once a year, make a date and shop around for better rates on car insurance and renter's insurance. You'd be amazed how much you can save with just those two right there. Getting quotes from a few different companies can take about 15 minutes. It might easily save you $50 a month, which is helpful. That's another $600 a year straight into your home fund. Call your cell phone or internet provider and ask them, hey, are there any new promotions going on right now that I can get off into? I've been with you for a while. Like T-Mobile, I've been with them personally for like 20 years and went through all the different changes and sprints and all that good stuff. But being a long-time customer, they may have some promotions and things like that going down, and they can help cut down on that bill. And you'll be amazed what that one simple question can do for you. Just ask them. Call them up and ask them. And you'll be shocked at what comes up. And the second here, let's go to war on that high interest debt. I'm talking about the credit card debt. Now, if you can credit card debt at a 20% interest rate or more, that debt is an anchor dragging your finances to the bottom of the pit. You got to get rid of that. The interest you paying is actively fighting against your savings, to be exact. Making a plan to aggressively obliterate that debt is one of the best investments you can make for yourself. And once the card is paid off, you can take that entire monthly payment and redirect it straight to your high yield savings account that we set up for this down payment fund. Now, not only does this free up a huge amount of cash, but lowering your debt to income ratio will also make you look like a rock star with your mortgage lenders. They'd be like, wow, you are doing the thing. You got it going on. This is what I'm talking about. Yeah, let's get to work. So, finally, consider a temporary high impact lifestyle change also. This is something else you can do. Now, this isn't for everyone, not for everybody, but if you're serious about hitting your goal real fast, this is like the express lane. Could you get a roommate for a couple of years? It's possible. It's something to think about. Everybody is not interested in doing that, but it's a thought. Or could you move in with a family member for 1 year to slash your housing costs? And I know you're like, no, hell no. No, not doing it. But it's a thought. It's a thought. If you got a timeline and a goal, it's a thought. And we're not talking about a forever move, but something short term. It's a short term sacrifice that can literally shave years off your savings timeline. And just imagine the amount of money you could save by doing it. And like I say, that may not work out for everybody, and everybody's not in a position to do that. I do understand that, but it's something to think about. So let's go on to step number 6 here, and this is to boost your income and use those windfalls wisely. Boosting your income, using the windfalls from boosting your income, using it very wisely. Now, there are two sides to the savings equation here. What you spend and what you end up earning. Now, we focus on spending, but let's flip the script a little bit. Now, if you cut your budget to the bone and still need more, or you just want to get there a lot faster, then it might be time to crank up your income. Now, think about your skills. Now, could you do some freelance work in your field? You got sites out there like Upwork and Fiverr, which are full of gigs for writers, designers, spreadsheet wizards, all that good stuff. You can do some affiliate marketing. Or maybe you can monetize some hobby that you're into. Maybe you love to bake or DJ like I do, or you got some kind of craft, or you good at fixing things, or you cut hair, or you do hair, or you do them locks and braids and stuff like that, or put them perms in. Or you can even look at Etsy, look at a local marketplace. The gig economy out there also offers, flexible options like ride sharing or food delivery. So don't be scared of driving for Uber and dropping off some food when we're trying to put some bucks in your pocket so we can build up this home savings fund. But, the key is that every single dollar from this extra work goes directly into your home fund. That's what I want you to keep in mind. And this isn't a lifestyle for inflation. This is for a goal to accelerate the process, speed things up a bit. So if you don't mind gigging or having a little side hustle or taking your hobby to the next level, the income could be beneficial to you. And then next you need a plan for your surprise money you get. Sometimes you get a little extra windfall of money that comes out of nowhere, or a bonus or something like that. I'm talking about windfalls like your tax refund, or you get a bonus at work, or you get cash as a birthday gift. Hey, happy birthday. We had those birthday parties and the birthday cards be loaded up with cash. Now, that's what I'm getting to. That temptation, you see this is, this fun money. It's a little extra pocket money, but your new mindset is that this is your gold money now. Yeah, it's your gold money. It's that home savings fund money. Same with that tax refund. We'll put that straight into your home fund. You get that tax refund the next go around, dump that off into the home savings fund. Watch that account grow. Same with that work bonus. Stick it straight into that home fund. A few of these are over your timeline and can make a massive dent in your goal. So, depending on your timeline, how quick you're trying to get there, these little tips can help. So kind of keep that in mind. But a quick and important note here on gift money. Now, if your family would like to help you with the down payment, that's cool. They actually can do that. Just know that lenders will require a formal gift letter from them. So they have to write out a letter saying, look, hey, I gave John Doe some money. This is my favorite cousin. I love him to death. And I want them to have some money. I want them to get their home. So I gave them some money. They don't have to pay it back. It's just a simple document stating that the money is a gift and not a loan that you got to repay. This is totally standard in the industry, and you don't have to sweat it. Ain't no big deal. But you just write out, because when the lenders go to look at your accounts and you see a big windfall of money dropping in your account, they're going to know where it came from. Like, hey, my cousin or my auntie gave me that, or my grandfather gave that to me, because they want to see me succeed. They want to see me get into this home, and they gave it to me as a gift, and I don't have to pay it back. So keep that in mind. And let's get around to step number 7 here, which is to monitor, adjust, and then celebrate. Monitor, adjust, and celebrate. Now, saving for a home is a marathon, and it is not a sprint. It's a marathon. It's easy to be fired up for the first couple of months, but maintaining that focus for a number of years, that can be tough. It can be a little rough on us. And that's why this final step is so important for staying engaged. First off, just keep an eye on your progress. Monitor your progress. And at least once a month, log into that high yield savings account that we set up. And just take a look at the number and just watch it grow. Watch it expand. And with this simple act, it is so powerful. It's like a positive reinforcement, and it keeps your goal from becoming some kind of abstract type of idea. And then second, don't be afraid to make some adjustments. Life does happen. Your income might go up, or unexpected expense might pop up. Your budget isn't carved out in stone. It's just a living plan. And if you find a new way to save, cool. Increase your automated transfer. Just increase it. Go up on it. You've been automating this thing. Just increase it. Go up on it. And if you have a setback for, say, a month or two, that's okay. Things happen. As we say, life gets in the way. Figure out how to get back on track and get on. Keep it going. Just don't stop. Don't give up. And just understand things. They're going to happen. And sometimes we don't have no emergency expense fund set up to the side. And then finally, and this part right here is non-negotiable. You're gonna have to go out and celebrate your milestones. Now, a huge goal like saving up $48,000, it can feel kind of intimidating. So just break it down. Set a mini goal for like every $5,000 to $10,000 you save. You can celebrate that. When you hit this milestone, just go out and reward yourself for that. Now, nothing big. I'm not talking about blowing your whole savings on celebrating a milestone. I'm just talking about a nice dinner out, a weekend hanging out with your homies, things like that. Spending some time with family and friends, and enjoying some good food. Something you enjoy that's not going to derail your progress. These little celebrations are vital for staying motivated and making that journey feel as good as the destination. So let's just pause and look at what you can now build. We started with a vague, overwhelming fear, and we just turned that thing around into a plan. We got something to work with now. You now know you don't need to have that mythical 20% down payment. Throw that out. It's no good. You do not have to have 20% down as a payment. You can, but you don't have to. It's a myth. It's not written clear cut across the board that you have to have 20% down as a down payment. But you can have a clear, specific savings number for you to shoot for. You can have a budget that puts you in the driver's seat. A system to automate your savings so it happens without fail. And a special account where your money can actually grow, that home savings account. Now you have strategies to speed things up by cutting costs, killing debt, and boosting up your income. Cutting costs, the things we don't need, them subscriptions that we got that we're not going to use, that gym membership, and we only went once or twice a year, and cutting back on some of that credit card debt and trying to get a lower interest rate. Now you got a plan. And you have a plan that's going to help you stay motivated for the long haul, and you're going to need that. So the dream of home ownership is really not out of reach, and it doesn't take a lottery win or a secret trust fund to get yourself there. It just takes a plan, a process, and some persistence. And now you have the first two, a plan and a process, and the last one is all on you. So as a final call to action, I want you to take one more step as soon as this video is over with. I want you to go and Google down payment assistance programs in my state or in my county. Down payment assistance programs. Google that. There are thousands of local and state programs out there with grants and forgivable loans for first-time home buyers. And you might be shocked to find you qualify for thousands of dollars that you didn't even know existed. Thanks so much for watching. Go open that home fund savings account and take that first real step towards your new home. You got this. You're in control. Let's do it. And this has been Lloyd for Real Estate.